Jai Hind children. So, today we are going to discuss about the first chapter of partnership, and the name of the chapter is Partnership Fundamentals. Fundamentals means we are going to discuss about the basic concepts of partnership, how to prepare, how to distribute the profit, and let us know how to begin to start solving questions. The very first topic is profit and loss account. So, I hope the format is everybody must remember. This we have studied in class 11. This account records your net profit, and this net profit is going to be added into the balance sheet. But now we are going to prepare the further step, the extension of this account, which is going to explain about how the net profit is being distributed among the partners. So, here we go. This is our profit and loss account, and whatever we will have the net profit here. Right? This is our total. Remember, if in the question it is given manager commission, then this has to be written, it has to be deducted from profit and loss account only, right? Now we are going to prepare PL appropriation account. Let us discuss the format of PL appropriation, but before that I would like to add some basic informations related to PL appropriation. On the top we will write PL appropriation account for the year ending whatever the year is given. And then let us record the very first item. This I am discussing the format of PL appropriation account. Suppose we are having two partners A and B, okay, and this amount will get added and it will be recorded here. The possible all the incomes, all whatever we are going to give to the partners, that has to be recorded into this, because this is the account which will explain you how the profit is being distributed among the partners. Before that, I would like to add some features. So, the very first feature is, it is nominal account. The second feature is prepared after profit and loss account. Prepared after profit and loss account. Remember, this profit and loss account which I am talking about, which we have studied in class 11, which is prepared for the sole proprietorship, not for the partnership, right? And the third feature is, it is prepared to distribute the profit among the partners, right, after making payment, because some partners are doing some work, so for that they need to be paid, right. So, interest on capital, remember this interest on capital is always calculated on opening capital. If it is not given, then we need to calculate. This is calculated on opening capital, okay. Then we will give to salary. Salary can be given to both partners or any one of the partner. So, let us take both partners, the probable thing we are paying to both partners. And then again this amount will be added and it will be recorded here, right. Then to commission, again A and B added and it will be recorded here. Now the time has come to calculate the balance, right. Here we will write by net profit, which we have got from here. This has come from here, okay. I hope it is visible to all of you. So, here it is net profit. At the credit side we are going to record by interest on drawings A and B. This will be added and it will be recorded here. And then we are going to total up the credit side of PL appropriation account, okay. This is the closing column we have drawn and it will be join, and then from here the format will has to be close, okay. So, first we will do the total of this credit side and from this we will deduct all the total of this debit side, okay. So, we will write it here to profit transferred to their capital account, and here we will write A and B and here we will give this. Remember, this is also known as distributable profit. What it is called? This profit is known as divisible profit or distributable profit. So, any name can be given. Divisible profit is very common, which we generally use when we study, right. And now we will have the complete PL appropriation account, okay. Now, there are some items, so let us discuss. We will begin with interest on capital. The amount of capital which the partners have invested in the business is on which firm is going to pay interest, right. So, remember, payment of interest on capital is an expense for the firm, right. That is why it is recorded in PL appropriation at the debit side. And be careful, we calculate interest on capital always on opening capital, right. Suppose if opening capital is not given, then we are supposed to calculate this opening capital by applying one formula which we have already studied in class 11, that is closing capital plus drawings minus profit minus additional capital, right. Additional capital is also known as further capital or fresh capital. What is additional capital? When partners introduce some more amount of capital into the business apart from the amount invested at the beginning, right. So, this is what here we will get. Here we will get opening capital. Now, on this opening capital, we will calculate this interest on capital, right. There are several cases given in your book which you must go through it. Now, let us begin with the next term, that is salary. Of course, when partners are working for the firm. So, there sometimes they are need to be paid in the form of salaries also apart from the share of profit, right. So, remember at the time of this we need to be very careful that salary can be monthly, quarterly, half yearly and annually, right. If annually it is per annum written, then there is no problem. But we have to be very careful while checking this, that salary of the partner, is it monthly? If it is monthly, multiplied by 12. If it is quarterly, multiply by 4. If it is half yearly, of course, we are going to multiply it by 2, and if it is annually, no need to multiply. We will directly record the amount in this profit and loss appropriation account. Now, let us come to the commission. Again, yes, if they have worked for the firm, so they are supposed to get some sort of commission also, and this has to be calculated also. Again, this rule is going to be applicable for this, but there are some conditions for calculation this commission, right, partners commission. We will discuss this later. Then we have the balancing figure in the form of this divisible or distributable profit, but before that we need to study about interest on drawing. Remember, when firm allows to use firm's assets for personal use, then firm charges some sort of interest in the form of interest on drawings, right, and this has to be recorded at the credit side of profit and loss appropriation because it is an income for the firm. Why it is recorded? Because it is recorded at the credit side of the profit and loss appropriation because it is treated as an income for the firm. Remember, interest on capital at the debit side and interest on drawing has to be at the credit side, right, because interest on capital is an expense and interest on drawing is an income, okay. And after doing the totaling of credit side, then we will find out the balancing figure, which is known as divisible or distributable profit. Now, let us move towards some more cases related to interest on capital. As few seconds back or few minutes back, as I told that there are several cases related to interest on capital, right, and we must go through it because we have to be very careful while reading questions related to this chapter. Whenever question is asking you to prepare PL appropriation or profit and loss appropriation or profit and loss adjustment, do not get confused, both the terms are same, right. So, there we have to be very careful while reading the sentences, the informations given in the question. Use pencil to underline, right, so that you can remember that what you have to calculate, okay. And how will you underline? The first thing, date given in the question, right. You underline the date, then you underline the amount of capital of the partners, then you underline the amount of salary, then you underline about the commissions information. So, let us begin with the interest on capital. The various cases of interest on capital we are going to discuss. I hope you all must be getting all these things. Now, we are going to start with the various cases related to interest on capital. Okay. So, let us begin. The very first case, if partnership deed is silent, okay, I am underlining this, is silent about the treatment of interest on capital, then no interest on capital will not calculate if it is not given anything in clear information, okay. Second case, if it deed says, I am writing in a shortcut, if partnership deed says provide interest on capital, provide interest on capital, then yes, we will give, okay, because here it is treated as appropriation. So now what is appropriation means? When we have enough profit in the business to provide all these, that is called appropriation, right? There is one word, charge. When you will go through this word, you will find this word in the question for any of the adjustment. Then remember, this becomes a compulsory payment or compulsory thing which we have to do irrespective of the availability of the profit, okay? Sometimes the third case, when deed says that interest on capital, we have information related to interest on capital, but profit is inadequate, right? Now in this we will give IOC in their ratio. Okay. So let us begin. See, we have profit of rupees 7,500, but we are getting the interest on capital of A is 6,000 and B is 3,000, right. So we are supposed to make payment of 9,000, but we have profit of 7,500 only, okay. So here this is what our profit is inadequate, okay. Our profit is inadequate. Now in this situation, we will calculate the ratio of these two. So this will come 2:1. Now this 2:1 is going to be applied on this, and this will be divided in this ratio, right. So 7,500 multiplied by 2/3 and 1/3. So 2,500 and 5,000. In this way, we will distribute the amount of interest on capital in this ratio, okay. Now, we have one more case when it is written, yes, if deed provides information, if deed gives information, okay, yes, okay, we have to pay interest on capital, right. We pay interest on capital at the rate of 10%, okay. But we have incurred loss. We have incurred loss. If we are in loss, then no interest on capital, okay. If we are in loss, then no interest on capital. Remember, we are preparing PL appropriation account. So appropriation means when we have enough profit, okay. In the previous case, we had profit, but it was inadequate, means the amount of profit was less than the total of interest on capital, okay. So that is why we calculated ratio of the interest on capital of those two partners, and then we distributed the available profit among them in the name of their interest on capital. But now in this situation, interest on capital is given, the information is given, but firm is in loss. firm is having loss, then no interest on capital, right? Remember, if firm is in loss, then no interest on capital. If there is no information related to partnership deed, if it is not given in the partnership deed or it is not given in the question related to interest on capital, then this also no interest on capital. And the last case of this, that is when interest on capital is treated as charge against profit. Okay? If deed says provide interest on capital, I am writing in short form, interest on capital even if firm incurs loss. Okay. Now again be careful, here it is written even if firm incurs loss, then yes, we will give then interest on capital will be given. Okay. So these all were the various cases. I am going to drag this on the board. I hope it is visible. If partnership deed is silent, no interest on capital to be provided. If deed says provide interest on capital and adequate enough profit we have, then it is treated as appropriation. Okay. If profit is inadequate, then we will calculate interest on capital and their ratio, and the available profit will be distributed as per the ratio. If deed gives information pay interest on capital at the rate of 10%, and if we are in loss, suppose if we are in loss, then no interest on capital. Okay? And if deed says provide interest on capital even if the firm is in loss, then yes, we do not have any choice, we have to pay interest on capital. Okay? So now the second term in the profit and loss appropriation, it was payment of commission. So there are several things related to this payment of commission to the partners, right? So keep your pen and copy ready to note down the various formulas, various cases on how to calculate the commission of partners in different cases. Okay? So let us begin. I am going to drag this. Now, we are having the next topic, that is calculation of partners' commission. Right? This is our next. Now, the very first case, I hope we all have studied, not hope, it is 100% sure that we have already studied about the manager's commission. There were two ways to calculate manager commission. The first one was on the net profit, second was after charging, before charging and after charging. So before charging means directly we were calculating the amount of manager commission based on net profit, whatever rate of commission is given, right. When we were going for the second option, then the formula was net profit into rate upon rate plus 100, right. The same thing we are going to apply here, only we have to be very careful while reading the sentences, while reading the information given in the question related to calculation of commission of any partner, right, or you may say partner's commission. Okay. So let us begin. Suppose if directly it is written that charge commission, B's commission on the net profit. Okay. So simply net profit into rate upon 100, right. Second case, after charging, okay. Second case is after charging, this was before charging. After charging, net profit into rate upon rate plus 100. Sometimes in the question it is given that third case I am telling, provide commission to be after charging interest on capital. Then formula will be, here I am writing, provide commission to B at the rate of 10% after charging interest on capital. Now in this, our formula will become net profit minus interest on capital of both partners and then into rate upon rate plus 100. Why? Why rate plus 100? Because here it is written after charging. Remember, whenever you find this word after charging, you make up your mind that you have to use this formula, rate upon rate plus 100. Okay? Now the next, provide commission to be after charging interest on capital and A's commission. Okay? And A's commission. Now, here the formula will become net profit minus interest on capital of both A and B minus commission of A and then into rate upon rate plus 100, right. So, these were the different cases of calculating commission, right. So, that is all for today and we will be coming for the next video with the new topic. Thank you. Jai Hind everyone.